Good morning, everyone. Today I'm going to tell you whether you should invest in Pairi Daiza or not. As you all know, Pairi Daiza is a zoo. So why should you invest in this zoo? First, I'm going to give you some information about the financial situation of this company. I've calculated and analyzed some important things. Good morning, everyone. Today I'm going to give you some information whether you should invest in Pairi Daiza or not. So why should you invest in a zoo? Well, I will make this all clear in a couple of minutes. First of all, I will talk about the turnover. Secondly, I will discuss the liquidity, continuing with the solvency ratios. After that, I will discuss the shares and dividends. Finally, I will share my conclusion with you. So let's start with the turnover. When we take a look at the turnover of this company, we see this is not very stable. In 2012, there was a big drop, which recovered in 2013, but in 2014, it's decreasing again. This is no good evolution, but I think we can see this as a normal evolution because the zoo constantly invests in innovations. These invests involve more in visitors and the new experience of these visitors. Both results are very low, with a soar in 2012. The company will still be able to repay its debts, but in 2014 they only have 23 cents for €1 of current liabilities. Secondly, we will take a look at the solvency of Pairi Daiza. Solvency refers to an enterprise's capacity to meet its long-term financial commitments. First, I will discuss the financial independence. This ratio gives us information about how much equity the company has for €1 liabilities. The higher the result, the better. We see that during the year, there's always a loss. This loss isn't dramatic because the company still has enough reserve. So we can conclude that the creditor is safe and this decrease should not be considered as a negative point. When looking at the general debt, we see it has increased over the past few years. We can see this as a negative point, but this company still is in a healthy situation because the results should be between 1.5 and 3. This means the liabilities are 3 times the equity. The higher the financial independence, the lower the general debt. So my conclusion of the solvency is that over the past few years, Pairi Daiza had more debts, so the financial independence reduced. But this isn't a bad thing, because we know the revenue is increasing. An explanation of this evolution might be the panda bears. Before their arrival at the zoo had to make a lot of investments, so the cost raised, but on the other side, since their arrival, the company had a lot of visitors, so it was worth making costs. The company is making profit after this large investments. Take a closer look at this graph. This graph shows us the evolution of the shares. We see that since the beginning, the shares have slowly increased. At the beginning of 2014, we notice a remarkable soar. This is related to the panda bears who were joining the park in February 2014. So many people were investing because the value of Pairi Daiza would hardly increase. After this peak, the price has decreased a bit, but the shares are still worth more than before the peak. I think this is a very positive evolution that would convince future investors. This graph starts at the beginning of 2015. As you can see here, the price of a share has been very stable the last month. Now the price is slowly rising. There have been a few drops, but no dramatic falls. So we can conclude there has been a rise in Pairi Daiza stocks, which is ideal for its subjects considering an investment. As you see, you will get a dividend every year. This really is a reason why you should invest in Pairi Daiza. The earnings per share also increased the past few years. So I can conclude that Pairi Daiza is a healthy company. You will get a dividend every year. I recommend investing in this company, but I think you will take a little risk.